Hey, thanks for checking out this week's FinPrep Trading and Investment video newsletter. So there's an interesting week last week for technical analysis. Basically, what we had was, more or less range-bound market. High of days of Thursday actually coming in right on that trend line that we've been showing you approximately the past month or so, where prior off the 420 highs, capping the prior rally in through June, as well as providing support to the bounce within August, and again high of days on Thursday. So pretty neat on that respect. With regard to what placed in the bottom when we flip to the weekly chart, that rising 20 DMA, or weekly moving average in this case, is within like 5 cents of basically low of the week. So interesting stuff here with that piece. A slight negative crossover on the weekly MACD, which under other conditions would be a cause for concern, as would the impending bearish crossover of the 20-day moving average with the slightly rising 50-day moving average. The issue here, though, is that we have Fed decision with regard to discount rate this Wednesday mid-session, which can easily negate both of those otherwise negative signals. So really kind of withholding judgment until seeing how the market settles post-Fed decision and announcement, and in through Thursday. But basically, to the downside, still looking at potential zone of 210 as an interesting area for any new longs. If the SPY recaptures the narrow trading range that we had prior to the breakout at the end of last week, then in that case, still targeting the 220, 222, and so forth. But in terms of looking towards new entry, probably would withhold until 210, and even at that, waiting until post-Fed, should it even get there. So that's kind of what we have with the SPY. In terms of currencies and commodities, just a bit of chop. One thing I did want to call your attention to, though, was XLF. So XLF being the financial sector spiders ETF, basket of primarily bank stocks within the SPY. So really, it's a relative outperformer in through 2013 and even in through 2015 during the QE2 heyday, and really kind of beset itself into a downward price channel. You can see there's a breakdown in Q1 briefly, and putting in actually an inverted head and shoulders pattern, more or less with your shoulders, head, and shoulder. Price then rebounding within the price range. You can argue this piece here is another inverted head shoulders, although it's again, it's misplaced, and really it's functioning much more of a bottoming pattern here. But nonetheless, price rose from here, broke out of the price channel. Now here we have last week a sell-off in XLF, news-driven based on fines with regard to some of the financial institutions, both domestic and abroad. So producing a bit of sell-off with regard to XLF. Like this zone is interesting in that this would be then a retest of the breakout of the upper resistance band, right? So price couldn't get through here. It was resisted, and then as we come in, this then theoretically could become support should the trend line hold. So oversold on the daily, needless to say, as a result of this downward action over the past approximate week and a half. So XLF does look interesting. The other piece wanted to call out quickly was FXI, which is an ETF of Chinese shares. Looks like 25 apparently. I haven't looked into it, but have been watching the price. Did mention approximately a month ago that price started to look interesting. Right, so breaking above the 250-day moving average, holding into the 20 more or less, and then beginning a run of after that piece on about 9 days, fading into what was more or less a bull flag, and then we got another 4-day, essentially a little bit of a run out of that. So declining with regard to probably percent as well as time, but it does kind of argue for an interesting case here where we have three factors which make this 3650-ish zone kind of interesting. The rising 50 DMA, the declining trend line, which functioned as support within the more or less bull flag, as well as a Fibonacci retracement level of 23.6. Your primary Fibos are going to be your 38 and your 61, but taking a look off the low year-to-date to the high year-to-date is, it's darn near a 40% run. And then your first retracement level, 23.6, coincides nicely with those two other indicators, your trend line and your rising 50. So kind of interesting piece. Don't know if it necessarily will get down there for another shot, but if it does, it's something we'll probably take a look at. More interested in XLF, to be honest, and probably will wait for after Fed Day. And SPY, obviously, as mentioned, was interested at 210. So we'll see what happens, and we look forward to an interesting week ahead. All right, take care, guys. Talk to you next week.